You opened your screen, you made some money, but after some time, you get chopped out from the market because it's doing a stop hunt. But you don't know why it's doing and how it's doing. Today, I will teach you my only model to make money using stop hunts. Yes, that's correct. Don't be scared, but there are some things that you need to know before we start learning this model. So the first thing is you need to know what is NWOG opening gap. Sometimes we call as an NDOG. The second, you need to know what is a fair value gap. And the third one, which is the final one, the sessions. If you don't know what are those meanings, I am putting in-depth guides for all of these things so you can learn for free. Let's start. Now the time is 3 a.m. Eastern time and we are always trading on the Eastern time. Keep that in mind. You can see that this was the Asia high and this is the current London high, and now we are trading at the London session. So what the price did here, price took out the Asia high, created a new high, and it's created an equal high on the top side. So we can use this level as a buy side liquidity, which price wants to come and take out those liquidity in the proper time. Now you can see that the price is trading at the sessions lows. So let's roll the market together and see what is going on. You can see that this 00 means that this is the midnight opening price. Very important. Now the price is going towards to down and we can see a clear downtrend. We got the bearish order block here, we got a lot of bearish fair value gap and the break of structures. I want you to think now and stop the video and tell me where the price is going. It's very clear, right? We have Asia low and we have NWOG opening gap. So these are the liquidity levels, but the major ones, price always wants to go there and take out those liquidities. But always we have this question. You know where to go, but you don't know when it will go. So let's roll the market, see if our theory is right or not. So we can see that the price take out the Asia low and it filled the NWOG opening gap and created a new London low. Because we are still trading inside the London session. In that scenario, what do you expect? You will just zoom out and see the bigger picture. The closest liquidity level is the New York launch low, and we have this high comes from the 30 November. So these are the possible targets, but currently we already took some major liquidity levels. It is completely normal that you can start waiting for the reversal trade. And where you want to target? Yes, you guessed it. These equal highs over here. These levels are always act as a magnet and we love to use them. You can even target the previous day AM high, which is very high chance. So now we are rolling the market and see what is going on. Price come and retest the midnight opening price, and if you notice something that we traded into the NWOG opening gap. So today is the 4th of December and this NDOG was from the yesterday NWOG opening gap. So 3 of December. Now the price come and retested 2 times of this NWOG opening gap from the current day, right? It might sound a little complicated, but I promise you it is not. It is so easy to trade. Just bear with me, okay? Please. Let's look at the chart. Relax, okay? The trading needs patience, so don't skip video, don't fast forward video, because I am giving you a golden nuggets here, my friend. So what we're looking at on the chart, the price come down, took out the major liquidity, and it created bullish order block. The first one and the second one. These are the major signs for price can do a reversal. But the question is, when? So let's roll the market. Let's see if we can get a clear candle closure above the NWOG opening gap. Why you are so obsessed with the NWOG opening gaps, Borsa? Great question. Because NWOG opening gaps and the NWOG opening gaps are the most powerful gaps in the market. intraday. So now we have tested. This is the first one, this is the second time, and this is the third time. What happened? The price trades into it, but we never get a solid candle closure above the new day opening gap. So what I want to see is get a solid candle closure above the new day opening gap so I can target the London high and the previous day AM high. Makes sense, right? But there is a one pattern that market loves to do every time. Now, I want you to think, let's remove everything on the chart, right? And I want you to think and look at this chart. What happened here? As a normal trader, it's absolutely fine that you take a long position after here. If you don't know why, I suggest you join my free trading classes that I do regularly. Anyways, so the price trades into this, couldn't create, and couldn't fill the new day opening gap. What happened? Pull back and tries one more time. How many times? This is second. And pull back and create a higher high. After 3 higher high, let's see what happens. Price trades back into this major fair value gap. This is a very important fair value gap. Why, Borsa? Why everything is so important? Because this is the first fair value gap that sign us of a reversal. If you zoom in here, you can see that this is the first created fair value gap when the price want to reverse after this rejection from this new day opening gap, right? So we took this major liquidity, filled the new day opening gap, and pulled back, created this fair value gap. Now, this is the perfect moment that you will execute your long position. Let's talk money here, right? So we are targeting the London high, and the stop loss, you guessed it, is the session lows. But if you want to be on like a little aggressive, you can just put your stop loss at here. Why? Because there is a one common thing that very easy. Take your fib tool and draw it, and the equilibrium point of this bullish order block can be your stop loss. If it trades below into it, if it closes the candle below it, you are not interested with this position anymore. So we are talking about here at least a 4-hour trade. And now what I want to do is execute with you here, right? Let's go for the 5 contracts. And my final TP will be the previous day AM high. And my stop loss is just below the equilibrium point of the bullish order block, and also it matches with the new day opening gap. Now what we're gonna do is I want to take you to my mirror chart and show you a couple of things, right? So let's do a quick recap before we continue to writing our position. I want you to understand everything very clear. 3 top stop hunt model. This is how I call it, but you can call whatever you want. Market dropped to a significant liquidity level, which is the NDOG, right? Fill that gap, reverse back into today's NDOG. Did a 3 higher high, but then drop back into the NDOG from the 3 of December. So this is what I'm talking about. Very easy to see. 3 top here, pull back into the NDOG, perfect trade. And now at that exact moment, it's your time to execute your long targeting the buy side liquidity. And you know what is it? Those 3 higher high was obvious stop hunt. And here is the golden tip. When market wanna do a stop hunt, it doesn't stop with 1. Most of the time it goes for 3 stop hunt, but sometimes it can do 2. You're gonna wait patiently. You have to wait patiently. I know it is hard because trading is all about waiting. The perfect moment comes to you, then you will execute. But Borsa, I know this question. How do I know when it's gonna 3 top? What if spikes on 2 top? That's a great question. And there's a couple of confirmations you can use, right? The first one is you can wait for candle closure above the new day opening gap. Remember what I say to you here. we never get any solid bullish candle closure inside of this new day opening gap. Every time we trade into it, we pulled back. So this is a golden tip for you. And second, check if price left unfinished business. What is this? What is unfinished business? So you can see that we clear out everything here, right? We took the liquidity levels. So if one of those stops, this one, right? So let's say we get this candle like this. The next candle, you will wait the reaction. You want to see the reaction. If you get the green candle again, this is your green light to take a position. And this time we are talking another model, which I will teach you on another video. But I think like 80% of the time we got this pattern every day. Every day. Maybe it's inside of the PM session, maybe it's inside of the Asia session, but we got this over and over again. So in this specific scenario, market created some inefficiencies while price going up. So before the real move up, most of the time revisit those before the real move. You got my point. So let's back on the chart and let's execute this beast over here. So boss, I'm in the position now where I take the break even, where I take the partials, and relax. I know your questions and I got the answers. So what you want to do is you will take the partial, because I always believe this. Pay the trader, okay? So partial here and break even here. Very easy. Partial NBA. So I'm gonna remove this. And what you wanna do, you wanna write the full position right to here. Easy as it is. So we will type in here full TP and let's go, baby. Let's do a confirm. And now I will roll the market and we will see what is going on. So the break even comes, right? So after that point, you will put your stop loss at break even. So what you want to do, you will take, let's say you can just took off like a two contracts here, and you left with 3 contracts. So the obviously you will sell it here, but since it's a replay mode, it's just going fast, whatever it is. So the final TP is here. Let's roll the market. Let's see if we get the full TP, and boom. As you can see that the price just took out the London high and created a new London high, and we even took the previous day AM high. Now tell me, is this model hard to learn? It's not, right? All you need is just go and do, I will show you, just choose a random bar here and go to the random charts and see if this model represents itself on another day. And please check how it reacts from the gaps that I mentioned to you. New day opening gap, the fair value gap, whatever it is. This is it. This is my 3 top stop hunt model. It works on gold futures, it works on Nasdaq futures obviously, and you can go and see with your eyes it's worked perfectly on the forex markets. So before I leave you with this beautiful model, all I want you to do is leave a comment below and tell me if you like it or not. If you have any questions, type in. I will answer personally one by one. And thank you for watching this video. Until the next time, see you soon.